everybody. We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leverage Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and hit the notification bell. That way you're notified whenever we release new videos. We do release videos every night throughout the week and once on the weekend. Make sure you're also following us on X at the handle Bullish Chips. That way you get real-time updates as to our entries and exits on not only scalps and day trades, but mid and long-term trades as well. We also offer further commentary throughout the day about price action on SOXL, things like internals for QQQs and other information that can help you make trades, profitable trades with SOXL. Just a reminder, we are not financial advisors. We do not offer financial advice, but what we do offer is our view at the price action for SOXL, not only in the current day, but in previous days, as well as where we believe price action is going to take us in the future. So without further delay, let's go ahead and get into the charts. As you can see, we are starting off on the week chart. Just taking a look back, little wider angle view as to how the week finished up and what price action showed us. We'll zoom out a little bit more to look at the month and the quarter, since we did start a new month. And then we'll get into the notes as far as our triggers and targets for the week, the day, and the 4 hour, because we already have our targets and triggers for the quarter and the year set up, and they're playing out pretty much as we expected. So let's take a look at the chart. We did get a 2 down last week, and if you're not familiar with our channel, we do use the strat as the base of our trading method. If you're not familiar with the strat, go ahead and check out the link in our description to Rob Smith's YouTube page. Rob Smith, rest in peace, he's no longer with us. He created the strat. You can find more information about it on his YouTube page, and there's plenty of information on the internet about Rob. So if you want to do further research on Rob and what he's about and how he came to be, go ahead and check that out. Make sure you also check out the other links in our description to the videos for how we set up our charts. That way you understand the different colors for the broadening formations that we have, the few indicators that we do use. We don't use a lot of indicators, and just get a better idea of how we set up our charts so you can better understand the trading method. Again, getting back to the charts, like I said, we had a 2 down on the week. We were hoping for a 2 down, but more of a failed 2 down than this type of 2 down. That way we could possibly get the 3 failed 2 down and then 2 up, going back to the upside. Again, we can see this 2813, which flips the year green. That's acted as rejection or resistance once again. If we bring it down to the day chart, we can see it's been rejected, it's been resistance multiple times, once, twice, 3, 4, 5 times. We did make a range over the last 3 or 4 weeks after the gap up on, I believe this was, June 23rd. After the gap up on June 23rd, we've been in a range, and this is the first time we've really pushed below the range and had some price acceptance below the range. So kind of an indicator that we could have more of a pullback in store. This drop below the range did follow a lower high on the day. So you can see we came up, hit the top of the range, but didn't quite meet the high that we had previously. So that does start a downtrend, technically, a lower high followed by a lower low. So from the day's perspective, this is the first time that we've really flipped to a downtrend within this last 7 weeks of price action that's gone to the upside. Let's go ahead and flip back to a week chart so we can look at that. We can see that we had, after the April 7 low, we had a nice push up followed by a pullback for a couple of weeks, and then we had 7 straight green weeks, which we've only seen one other time on the chart for SOXL, so it's pretty rare. And the time that we did see it on the SOXL chart, it was followed by a couple weeks of pullback. So we've been talking for a couple of weeks now that we've been expecting or looking for a pullback, not predicting one. That's not the business that we're in. We're not in the prediction business, but just being prepared, more prepared for a pullback um, than we were through this 7 weeks of upward movement, right? We're always prepared for a pullback, but um, knowing that there was some pretty heavy resistance we were coming into this weekly broadening formation, which is this purple line, this monthly downtrend line, which is this dash green line, along with the year flip, we knew would be some pretty heavy resistance. Even without having like the year flip up there and the broadening formations, if you just look at the chart, you can see this is an area of, you know, it's an area of chop. Getting back into it is going to be kind of hard because of how many times it's been support and resistance. So it's a very very strong point of control basically, and, we knew it was going to be a fight to try and get back above the year flip while we were still encountering this monthly downtrend line and weekly broadening formation. So we did make a couple of gaps in the week and we closed them. Let's go back to the day chart. But we did also on Friday peek into this gap from January 23rd. So could we close the gap? Yeah, it's very possible, most likely probable. Just depends on how we open back up. We did finish the day strong on Friday. So that was maybe, could we still hang on to this range that we've been in, possibly break through this monthly broadening for the last time and finally flip the year green. That's Friday could make you think possibly that could happen by looking at the daily candle. But again, we are in a daily downtrend, so could we just be possibly going up to make a lower high, possibly? And what else did we have on the? There's something else that's kind of a traction. But let's get into how the day went on the week. Let's take the after hours off. There we go. How the day went on the 15th. So it did. We did have the gap down and the push back up. Found support at opening print. Pushed back up into Thursday's price action, but it did reject it. Tried to get a last push in the day, but that's what I wanted to say is that when I looked at the charts previously, we were red in after hours. So could this be a lower high here, like on the hour time frame? The hour was kind of flattening out. We did get the lower high, but it was followed by a higher low. So could this have been set a lower high once again, since we are red in after hours? Do we open up down? Do we push down after open? That's, I think, going to be the tell as to whether we close this gap sooner rather than later. We talked all last week about how the top of the gap can be a bounce point, a temporary bounce point, and that's really what we saw. So again, things are playing out how we would expect that they probably would. Just because we bounce off the top of the gap, though, the temporary is the key word there. How high do we go before we fill it? Could this be the bounce point and we just push back up for the rest of the month or whatever? Possibly, but we have to bring into account seasonality. August, September, October are seasonally the worst season for tech. Sorry if I can get that out right. So we do need to watch for that, and just keep that in the back of our mind. Let's zoom back out to the monthly time frame. We were in a combo 2 down, combo 2 up with the target of the high of this candle. That's been rejected essentially, with our already going 2 down this month. We're 1 day into August, but we're already 2 down. So are we just possibly going to make a higher low? Did we just make the higher low? We'll see, but I'm beginning to lean more towards we're going to have a little bit more of a pullback before we head back up. How big that pullback is, I'm not sure, Do we get a small dead cat bounce? Because if you do look at seasonality, although August, September, October is the worst seasonality for tech, over the last 5 years, August has become less of a loser per se, and so maybe we continue to push through August, or maybe even just the beginning of August, before we have our pullback. That could be the case. So could we pull off a 3 on the month, where we go below and back above the previous month? That's entirely possible as well. So we just want to continue to play things by ear. It is the beginning of the month essentially, so we do have to just continue to play that out. We did go 2 down, so is this we did trigger the 2 up, 2 down, the target being the low of this candle. So does do we fill this gap, which just ignites the push down to where we do see the bottom of this month? Do we bounce off of this weekly uptrend line? Do we use this gap that's down here at around 15 as another bounce point? Does the push through September and October, is it just a slow bleed that we get down to here and then bounce, make a higher low on the month time frame? On the quarter, we're still in decent shape. It's not, we've already poked 2 ups for the 2 down, 2 up, with the target being the high of this candle. Is this just a little temporary pullback before we continue to push back up to complete this strat? Is this going to be a lower high? We've got to bring that all into play. It's the beginning of the month, so still close to the beginning of the quarter. We don't want to get ahead of ourselves. Let's see. Yeah, let's bring in the daily broadening formations. So just looking at it from a daily perspective, it's playing out how we said it could play out. We've got this broadening formation, the initial broadening formation that was started once we reached the top of the move, right? So we have this wider broadening formation on the daily perspective from this higher high and this lower low. But then when we made the higher high and lower low again, they were much tighter, with this creating this tighter broadening formation, the orange lines here, which brought us into range. We broke below that, but we bounced off of this broadening formation. So now, does that mean we go back up to the top of the broadening formation and come back down? With Friday's green 2 down, it doesn't bring a lot of clarity to the equation. So we'll have to rely on the triggers and targets that we set up here in our notes here in a second to give us the guidance, going forward. We're not in the prediction market. Once again, we are not in the prediction market. So we just capitalize off of price action no matter which way it goes, right? We have triggers and targets set to both sides. Once something triggers, we enter, with good risk reward on whatever time frame you choose to enter, whatever time frame you're choosing to trade. We make those entries and then we exit when we need to exit. We'll usually leave a couple runners out there because 9 times out of 10 we're reaching our target point. Well, I don't want to say 9 times. More often than not, we're reaching our target point and continuing through it. So, nice to leave a runner out there, like we did today. We left or over the weekend, we left a put runner. So we'll see how that turns out on Monday. Just because we were red in after hours on Friday doesn't mean anything can come out in the news this week. The rest of this weekend, we've got all day Sunday, all Monday morning before the start of the open. So anything can happen still. Let's just get ready to play it either way. One thing I do want to do also is look at the internals for the week. Here we have the price action for SOXL on hourly time frame. We've got the 15-minute price action for the tick Q, 15-minute for the vol QD, 15-minute for the 80 QD. So we can see cumulatively how things stack up as opposed to in our nightly videos where we're just looking at the daily internals. And these are the quote-unquote internals that we're referencing many times when we're tweeting on X or just talking about it in our videos. But the internals are for the QQQ. Again, it's not 100% correlatable like the internals for QQQ would be for if we were trading QQQ, but chips make up a big part of QQQ, and more often than not, they're it's basically an overlay for chips as well, right? At least in this day and age, right? Over the last 4 to 5 years that I've used this method with these internals specifically, it's been usable, right? So we can see that when we see declines in internals, we're seeing declines in price action on SOXL as well. Breadth is a big part of that, which is the ADQD. And while you can see that while we had volume outflows in QQQ, the breadth did kind of gain, which you can see here in the price action, the gain in breadth here. And if we just kind of zoom in on Friday as well, the tick kind of reflects that as well, right? We have this big push up back into trend higher zone, which is here, the drop back down, but then the push back up shows here as well. So again, you can correlate these two. We're not using this only, like our only indicator, like, oh, volume is pushing down, we're going to enter puts. No, we don't use it like that. This is just another tool in the toolkit to help us determine where we want to go with our trades in accordance with other indicators and triggers and markers that we use. So we can see volume outflows were pretty tight on Monday. We weren't down here in trend lower zone. That's why Monday price action was able to push up, which wasn't. It did the same for QQQ as well, right? So this drop in breadth and tick in volume, there's few times that it doesn't truly show exactly what's going to go on with price action because it's so close to the zero line. If you're in the trend lower zone or the trend higher zones, trend higher zone is up here, trend higher zone, trend lower zone, that's when you can know you're going to see the push in the price action. So that's why Tuesday, by the time we got to trend lower zone at the end of the day, you saw the push down. We had the big push down here. It was a big push down in price action, but we never actually got to the trend lower zone, which allowed price action to push back up. We did get into trend lower zone here on Thursday, and Thursday was probably our biggest red day. It was a big trading day for us, but we did see the outflows on Friday, which is pretty. You kind of expect outflows on Friday, not so deep into trend lower zone as they were though. So it was interesting that we did get the push up with breadth. So just something else to keep your eye on. Vol QD, tick/Q, I'm sorry, and ADQD. Those are the internals for QQQ. So just something else to keep your eye on. Let's go ahead and get into our 4-hour markers. All right, so we can take a look and see, let's go down to the 15-minute, how our markers played out. So the peach price level 1 is our opening print. We mark that as soon as the day opens. The opening price is the opening print. And we can see, once we got below opening print and overnight low, there was a pretty good flush to the downside. So we added to our puts once we got the lower high underneath the opening print on the lower time frame. Let's get down to the 5-minute. So we did get a little bit of action. Looked for the gap close here, but we only peeked into the gap, and we got the bounce off of the daily broadening. So again, it was a light entry. We had already made plenty of money yesterday and the day before on puts, so we knew we were coming to this broadening formation, and that it was a chance for the gap close, but until we got confirmation on something higher like the 15 or the hour, we didn't want to re-enter too heavily. So if we go back to the 15, you can see, we got the push down, but we didn't get a lower high, right? It went low, and then we got a high, and got the lower high here. But at that point, we were above opening print. So when you're above opening print, you're looking more for calls. When you're below opening print, you're looking more for puts. So although we did get the lower high there, the lower high there, we got the higher low here right at opening print. So we went ahead and took calls. Your first target point is the previous low a day, which also matched up with the 4-hour trigger. And then your next target is the overnight high. Didn't quite make it to overnight high. did get through the previous low day, but we ran into that tighter broadening formation here, which acted as a rejection point. We can also let's bring up some fibs just to see what, nothing in there. Yeah, so nothing, no real major Fibonacci's or anything that we ran into to reject. It was just hitting the bottom of this, previous price range. Not so much the broadening formation, but the rejection of the low of this price range that we're in, right? So we're able to get a little bit of money to the upside. Again, you follow us on X, you can see our entries and exits. We give updates on internals and things of that nature. So if you're working or something like that, if you're not able to look at the charts, sometimes you can just follow our tweets, and we can kind of help guide. Now, again, you need to make your own decisions on your trades and when you enter and exit. One of the reasons we don't say exactly what contracts we're getting is we say what direction we're getting, but we don't say the strike or anything like that, because we don't want to influence anyone. There are hints at what we got, so if you're savvy enough, you can tell what we got into. But if you're that savvy, then you're probably entering your own trades as well. We don't want to be a call-out group. We just want to actually focus more on how to show you how to trade, show you the method, and show you why we use the method and how we use the charts to use the method to make these precision trades and high percentage trades and make profit every day. So here you can see with the 4-hour markers. Again, if you're not familiar with the 4-hour markers, link in our description to our precision day trading video. It tells you why we use the overnight low, opening print, previous low a day, overnight high, previous high a day as our markers and triggers and targets to be able to make high quality trades. Using this method, again, we could have got puts thinking that this was just a lower high on the 15-minute, right? Here was the last high on the 15-minute. So we came down here, made a lower low. This could have been a lower high. We could have entered puts here. However, using our method, we knew we were above price level, so we stayed out of puts. We got the higher low here, and it was above the opening print, and that gave us confidence that once we cleared the high of this higher low right here, this 2, we were able to enter calls and use our triggers and targets at that point, which would previous low a day, overnight high, to help guide us in where we would exit our trades. So again, let's get back to the 4-hour and just kind of look at again how it played out. We did get the 2 down, but we knew it was an extension of a strat reversal. So although there was a trigger, we didn't have any magnitude as a kind of magnet to attract price. There was only further targets, and one of our targets was the top of the gap. We did exit puts there, the puts that we had swung, the runners that we had swung, and that coinciding with the daily broadening formation was again further confirmation that this was probably going to be a bounce again, even if it's only temporary. From the 4-hour perspective, we finished the second 4-hour of the day as an inside candle or a 1, so that leaves the door wide open for a 1, 2 up, 2 down to go back down, possibly fill this gap, or a 1, 2 down, 2 up to continue the reversal back to the upside. So you just want to keep all that in mind. We've looked at the wide perspective view, we've looked at the little bit narrower perspective view and how price action moved on Friday. So let's go ahead and set up our triggers and targets for the coming week, and specifically Monday as well. Oops, if I can get my laptop to work, there we go. So let's go ahead and duplicate Friday's notes just so we have a base. So this is going to be Monday, August 4th. These notes will be from August 3rd. And there will be 102 trading days left in 2025 once we start trading on Monday. The close price for SOXL on Friday was 24.08. All right, and then This is the week of 8/8. We don't have our flip yet for this week because the week hasn't started yet, but we do have the flip for August that we need to fill in. So the opening print on Monday was the opening print for Monday, of course, but because it was the first day of the year, that's going to be the opening print for the week as well. So we just want to signify that with this indicator, and we'll make it this red color with the dashed line. So all of our flips, the week, the quarter, this is also the month as well. I'm sorry. So that was the week, but it's the month of August flip. So this is where the month flips back red. So if price action here goes back below this line, the month will be red. If you take a look at the upper left hand part of the chart, we've got the time frame continuity indicators. So we have the day was green on Friday, the week finished red, the month was green, and the quarter was red. So we've got kind of a mix, right? And then if we bring this out a little bit wider, it shows us our year. So we've got the week. We'll take out of account the week and the day because we're going to be starting a new day and week. So right now we have the month green, the quarter is red, and the year is red as well. So we don't have continuity between the time frames, which means that our trades aren't, we're not looking for like swing trades right now because a direction in a long-term perspective hasn't been chosen. We're just taking more, monthly swings and below. A lot more day trades and swing trades right now as price continues to just go up and down on a daily perspective until we start to get some type of continuity, whether it's to the upside or downside. If we get below this 2357, that flips us red, and we've actually got continuity to the downside, which you could probably grab some September, October, November puts and just let them ride at this point. Maybe you don't want to go too heavy right now until further downtrend has been put in on the day, or we actually started downtrend on the week. Then you can maybe put more weight into them. But you can start now by testing the waters with a September, October put, because especially if we flip the month red, because we've got full time frame continuity to the downside, right? So we want to continue to take all that to account, even when marking our triggers and targets on the week and month and day. Let's get out of this. No fibs, right? Oops. All right, so let's look at the week and let's set our triggers and targets. Again, didn't quite. I wanted the 3-2 down, but not quite how it came out this week, because we almost breached the top of the previous week, meaning that even if we go 3-2 down, 2 up, there's not much magnitude for us. The trigger would be the top of this candle, and the magnitude would be the top of this candle. It would flip us back into full time frame continuity to the upside. So you can look at it from that perspective, that maybe you want to grab some longer calls, but at the same time, we would be running into this weekly broadening formation, and until we put a higher low in on, until we put a higher low in on the day perspective, I would still be skeptical as to whether this is going to be our higher low on the month. Now, if we do breach this to the upside, it is going to be our higher low. There's no more skepticism about it. It is at that point. But I still wouldn't be able to say that we're just going to totally push up. We need that daily trend to flip as well. So if we just somehow gapped up and opened up here and just had a huge day of a push and went for a higher high here to lock in this 3-2 down, the trend wouldn't have been broken on the day perspective. It would have just been bounced off of the bottom of the broadening formation, and we would still just be in a broadening formation. No trend would really have been chosen. So let's go ahead and mark our triggers and targets on our notes. If we were to get a 2 down, of course, it would have to breach the low of this candle, which is 2257. So if we look to the downside of the week, this would be 3-2 down, 2 down. And again, the low here is 22.57. So the trigger is 22.57. And again, it's not a reversal strat. So there's not going to be a magnitude or a magnet to suck price to, but it'll have an extension. You could get into the 3 rule at this point, right? So what a lot of times, if you're not familiar with the strat, the 3 rule is once you have a 3, then price action takes you outside of that 3, whether it's to the upside or the downside. In this case, it's the upside. Once you go outside of the 3, if price action comes back inside of the 3, especially if it reaches 50% of the 3, then a majority of the time, price action is going to continue down through to break the other side of the 3. So from a strat perspective, is there an expectation that this price action should come back down and break the bottom of this 3, even if it's just temporarily before it goes back up? Yes, there is somewhat of an expectation of that happening. We can also just say that this is a 3 combo 2 up, combo 2 down. So from a strat perspective, that would be a reversal. And so that's another reason why we would expect the bottom of this 3 to be breached or to be met. Not just because of the 3 rule, but because of a strat reversal rule. So, it's another reason to be skeptical that this is just going to be our higher low on the week perspective. Not saying we can't go up and make a 2 up on the week, but even if we do that, we want to be skeptical that we're not going to come back down here and fill this gap or just continue the broadening formation. So let's continue with the markers. The 3, 2 down. So let's go ahead and bring out our fibs. Just to get a better idea of where other major price action may line up. So here's the bottom of last year. So this is last year's low. The yellow marker is the quarter. So this is last quarter's 50%. This is last quarter's low down here. This is the monthly, last month's 50%. Last month's low lines up with last year's low. So nothing really major from that Fibonacci perspective. Let's go ahead and bring in the Fibonacci's from last year's run up. This is 2024's run up. So this is the low. This is the 78.6. You can see it's also acting as a resistance point right now, but it's not down below. We don't have anything below here to act as another target. If we bring in the 2020 low to 2020 high fibs, we do have this 78.6 at 1868. So, that could be another target that falls in line with this kind of resistance support area here. So nothing major to bring in from that perspective. And yeah, not from there either. So we'll just use the gap and the 3 as our major target points. So the gap close here would be 21.98. And then the low, this low of this 3 is 2028. All right. If we want to go another extended, I don't think I really want to go too much more extended as far as targets are concerned, but let's bring in that 2020 run up. Yeah, so that's below this 3. So we'll use 1868 as our third target there. Now we do have lower lows on the week perspective here at this 2028, right? This 2028, and then 1510. 1510 is down here. So those do act as magnets as well. 1510 would be one heck of a move for last week or for 1 week. So I'm not expecting anything there, but you can see that lower low also has a gap right below it. So that could be another magnet just in later, September, October, or not, like we said, not exactly the best months for tech. Maybe September, October, we get down to this gap. Who knows? But for right now, our furthest extended target to the downside is going to be this 1868. Let's go ahead and mark our triggers and targets to the upside. So again, the 3 2 down 2 up reversal would be triggered with the high of this candle, which is 2816. And actually, let's take this underline off of there because we're not in a strat yet. So 2816, right? This is 2816. Yes, 2816. So this would be a 3 2 down 2 up reversal. So it would have a magnitude because it's a reversal strat. However, it's not very much magnitude. So the high of this candle would be the magnitude for 3 2 down 2 up. So this high is 2850. And then we will have an extended target of the higher, that is the higher high in that week. So we can have this extended target of the 61.8 fib of the 2020 low to 2021 high, or all-time high, which would be 3055. And we've already got that one in there, and we've already got another extended target. I don't think we would get past 32 next week if we did, even if we did run up. That's a pretty big run up. It'd be like 20% with SOXL being this low in price at this point. So don't think that we'll get that high, but it is a possibility. So we'll leave that extended target out there. Let's go ahead and zoom in now at this point and get more to the 4-hour triggers and targets. So again, we use these as our indicators for entries and exits. So we'll take this 4-hour trigger to the downside and move it to the low of the second 4-hour of Friday. We'll take the previous low, move it to the previous low of the day. Actually, we need to edit this gap. Let's see, that's how this, the low of this candle is 2257. So 2257 is the top of the gap now. All right, and we're moving that previous low of the day to yesterday's low, or Friday's low. This 4-hour trigger to the upside, we're moving to the high of the second 4-hour of yesterday, and the previous high of day, we're moving to the high of Friday. All right, so that'll help with our triggers and targets. So if we get something to the downside tomorrow morning, the first 4-hour, that will be a 2-1 2 down, triggering with the low of this candle, which is 2342. Oops, 2342. And it will have a magnitude since it's a reversal, and that would be the low of this candle, which is the previous low of the day, which is 2257. So again, we need to put a magnitude in here of 2257. Oops. And we'll have a further downside target of this gap close, which is 2198. And the further target would be this low here, which would be 2028. So again, if price action opens, even if it opens up in here, if price gets below this 2342, it will be below opening print, it'll be below the 4-hour trigger, and it would be right at the overnight low. So you could look for some choppy action right here, but then once we get some type of lower high on 5-minute, possibly 15-minute, maybe depending on how fast price action is moving, once you get that lower high underneath opening print, underneath the 4-hour trigger to the downside, possibly even underneath overnight low, you may need to get something in between there. You can grab puts, and your target would be your first target would be previous low of day, second target close of the gap, which is pretty reasonable if you take into account this daily broadening right here as well. We could hit that and then bounce, or we could break through the daily broadening. We'll see once we get there, but at least we have a trigger from a 4-hour perspective, right? And that gives you something where you can buy 1 week out. I mean, I guess it's Monday, you could buy something for this Friday, and be comfortable in letting it do its thing at the beginning. You may get a little bit of pullback at the beginning after it triggers, but as long as it doesn't violate any of our other rules, that if it gets back above the um, the 4-hour trigger and it makes a higher low and starts to push back up, then you got to get out. If you want to give yourself a little bit more room and wait for something for a higher low above, like the opening print, to where it's truly something where you want to get calls, then you can do that as well. But the more time you give yourself on a contract, the a little bit less delta you'll have, and you can start to scale in after it goes in the direction that you want it to go in. But if it's going against you a little bit at first, the lower delta will help in not losing as much money at the beginning of the contract. The theta is always going to be low for SOXL. It's one of the things I love about it. So you don't have to worry about theta eating away at your contract. And the contracts are cheap enough that you can, kind of dip your toe in with a few contracts and let them start to work. And then once you get another trigger and confirmation in the direction that you're going, you can add to it, right? So just kind of one way to think about these type of trades. So we've got our triggers and targets to the downside. Let's get our triggers and targets to the upside. If we were going to go to the upside, it would be a 2-1-2 up reversal. So the trigger would be the high of this candle, which is 24.32. 24.32 is our trigger to the upside, and because it is a strat reversal, there is a magnitude, which is the previous high of day, which is our 24.83. 24.83, and then we can have our extended targets here. The high of this candle would be a good extended target, which is 25.45. 25.45. And let's bring out our fibs just to see last year's run up. So we have, okay, yeah, 2601 is the 78.6 of last year's run up, 2024 run up. So that could be another great extended target there, 2601. All right, do we want to do anything higher? We can put one more extended target out there. I would say the high of this candle, which is 2674, if we're just having a great day. But we've got our triggers and targets to the upside. What's our higher high on the 4-hour time frame? That would be this 2813. Okay, so we've got our higher highs already set in. We don't need to add to them or change them. So we've got our 4-hour triggers and targets. Let's do our daily triggers and targets, and then the last thing that we'll do is put in our expected move for the week. Let's remove that Friday's expected move, because this will be this Friday. And for right now, we'll just put this like that. 8.8, and this will be 8.4. All right, so again, we'll come and fill this expected move here in a minute and put it on the chart as well. But let's continue on. Now, with our 4-hour triggers and targets, whenever you have a strat reversal that has a magnitude, that magnitude on the 4-hour is going to be the trigger on the day. So we'll go ahead and move those because we had magnitudes. We'll move those, and let's get into the day chart. All right. So here we've got the 4-hour triggers, 4-hour markers out of the way, so we can see this chart a little bit easier. One thing we don't have in here, which I need to just put in here because it helps really mark this zone, is these daily broadenings. There we go. That really helps mark this tighter zone that we had. So let's go ahead and get our triggers and targets for the day. We got the 2 down extension here would be triggered at the low, which we've already got in there, 2257. All right, 2257 here, because that was the magnitude of the strat reversal. And actually we need to mark Forgot to put these ones in here. So that would be a 2-1, 2 down, triggered at 23.42 with the magnitude of 22.57, which would then trigger the 2 down, 2 down continuation of on the day. Because it's a continuation, not a strat, we don't have a magnitude. We have 22.57 as our trigger. Our extended targets will be the 21.98 and 20.28. All right. We take the lower lows on the day. This one is 20.28, right? Since we've taken out this lower low, that lower low, that lower low, we're in this daily downtrend line, really, right? If you want to put a downtrend line here, we can do that. So we can see we've got a downtrend going. But the next lower low would be this 20.28. 20.28, because again, these are some, kind of magnets of their in their own sense. This 1984, and lastly, top of this gap, 15.24. All right, so we would have a 2 down, 2 down trigger at the 22.57 with a target of 21.98 and then 20.28. That would also trigger the two down, 2 down on the week, which again, our 21.98 is there as a target, 20.28, and 18.68 is the further extended target. So you can see how all of this kind of just dominoes into each other and will give us more confidence in buying puts, right? The August, the month, has already triggered the 2 down, 2 down. So we need to underline that to signify it has. And so the quarter strat was in force. The 2 down, 2 up was in force at 25.84. We're now below that. So we need to take the bold off of this to signify, okay, it did trigger. So it did go above 25.84, but price action is no longer above 25.84. So the bold would indicate that the price was still above 25.84, but it's not. So we want to take that out of there. What we are getting close to doing is getting back in force the 1, 2 up, 2 down on the month, right? So I mean on the year. So let's do that because we didn't even look at the year. So right, if we go to the year chart, let me go. Zoom in a little bit. We can see that we ran a 1. So in 2022, there was a 3. So it went slightly above 2021 and then handily below 2021. 2023 was an inside year, right? Not a lot. I mean, we did get the push up, but it was stuck inside of this engulfing candle. So that gave us a 1. We failed 2 up in 2024, and then in 2025 we triggered the 1, 2 up, 2 down reversal once we broke below last year's low. And that's why we went to basically the bottom of this 3, because when you go 1, 2 up, 2 down, the magnitude for that strat is the low of the candle that comes before the 1. So that low was here. So it was no surprise to us that we came down into this territory. We have these broadening formations there already. We were ready to execute on April 7th, and we bought plenty of shares. We bought plenty of leap contracts. And we were ready for that because simply off of the strat telling us, this magnitude was down here. Did we know we were going to make it there? No, we didn't know. We don't predict that, but we knew there was a very high probability due to the strat, and then price action followed in suit, and we were able to capitalize not only in making big purchases at that point. We were actually selling. We already had plenty of shares, so we were selling calls on the way down. We were buying puts on the way down. We were ready. This was a good thing for us, and what we now want at this point is for this to hammer back up, turn green, get us a hammer. That way we can get a 2 down, 2 up reversal and try and go start seeing these highs. But let's go back down in here. Again, we've got our triggers and targets. But again, we're threatening to go back into the 2 up, 2 down on the year. But if we keep everything tight, we don't go too low, then 2350 is kind of like hopefully going to be like a bounce point for us. And even if we do go below it for a temporary time, hopefully it can be turned into support and not act as resistance. If we do go below it and try and come back up through it, hopefully it doesn't act as a point of resistance. But if it does, then we know that we can probably start to look at continuing to sell calls, buy some puts, and things of that nature. But we don't want to get too ahead of ourselves. Right now, we just want to look at how the 4-hour could domino into the day, which could domino into the week. So just keeping all that in mind, we do have a pretty good probability of going to the downside. We'll be ready for it. We've made our triggers and targets. The last thing we want to do is just map out our expected move for the week. So let's go to here we go. Let's go in here, go to our options chain for SOXL. And we can see for this week, there's a market maker's expected move of $2.99.9. So we'll just call that even $3. So let's go to our notes, and we can see we have a $3 expected move. So 24.08 plus $3 is 27.08. Oops. And 24.08 minus $3 is 21.08. So we know we have an expected move of 27.08 to 21.08. And let's go back to our chart here, and we can we'll make a box. Actually, let's go ahead, and I should have one. Yeah, here we go. So if we take last week's expected move, move that up 7 days. This is our new expected move. We'll put it here, and we can see that moves that box over here. So again, it's looking more down. We would want the expected move to the high to be up here a little bit more if we could, but it looks like if we were to go to the bottom of the week's expected move, we would close the gap and end up around this 21 area. Let's look back and look at our notes. So we got 21.98. So that's really more 22. So yeah, let's see that 2028 could be a possible point, a bounce point for us. That could be the point where we go to and then bounce. That would take us outside the week's expected move. But again, the week's expected move is not, price doesn't just stop at the bottom of the week's expected move because the market makers didn't expect it to go below that. There's been plenty of times where the price action goes below the expected move for the week and beyond. So just keep that in mind. It's just a general guide as to where things could, price action could, if it doesn't bounce, it could just stall out around here. Let's go back. I moved that one. Let's look at undo, and you can see with last week's price action, price went up to the top of it and it fell to the bottom of it, and even when it went below it, it wicked and came back in. It wicked out and came back in. So that expected move, that expected move, you got $3 on it. 27. We could go as high as 27.08 if maybe there's some type of positive catalyst. We could go as low as 21.08. I don't think we need a catalyst to go lower at this point. We're in a daily downtrend, so we could just continue to trend. We had 7 straight green weeks, so there's plenty of profit to be sold off for people who bought. I'm sure we are not the only ones that bought at the April 7th low. I know there are a lot of people that bought at that low, so there's a lot of profit to be taken there. There's a lot of room for people to, continue to sell, let things sell off. Again, we're coming into that seasonality where It's not as high a performer for tech in August, September, October. So just keep all that in mind. But at least we have out here our triggers and targets. Oh, we forgot to put the flip out here for the month. Let's go back to, so the month flip is 2357. 2357 would turn us red. So we know right now we don't have great continuity. We've got the month and the quarter that are green, but the year is red. We're going to see what the week looks like. But we want to try and push back up and over that 2813. That way we can get the month, the year, and or month, quarter, and the year green, which would give us more confidence to go longs for a little bit longer period of time on our contracts. So right now we're just managing the let's see, we don't even have any November calls left. We rolled those to January 27. So we mostly, from a call perspective, we've got a couple for September that we're monitoring, and if price action looks like it's going to go down again this week, we're going to go ahead and get out of those. Otherwise, we've got the January 2026 and January 2027 contracts that we're just going to leave alone. They're in great position, a couple hundreds of percents on those. So we're just going to let those kind of cook and look to continue to sell calls. We have been selling calls over the last 2 weeks. I don't think we'll pick up any shares at this particular time. I would like to see a bigger pullback to pick up another chunk of shares. But on top of selling calls, we'll look to play puts if price action takes us that way. If price action goes back up, I will gladly open to that as well, because that would set a higher low on the week perspective. Let's go ahead and bring up the week. That would set up a higher low here, right? So we had a soft higher low here. That would make a higher low here. And if we continue to push up, maybe we break through this weekly and daily broadening formation. At that point, we would be totally through the monthly broadening downtrend line. We would be flipped back green on the year, which would be full time frame continuity to the upside. So the month, the quarter, and the year would be green. And we can maybe start targeting this gap close up here at 39. At the very least, taking out this higher high on the week, and maybe even this higher high, because as you can see with the broadening formation, this weekly broadening formation comes up pretty high. So again, I wish I could say, hey, buy longs for January 27 right now, but we've got it. Price action still has to be chosen as to which way we're going to go. Right now, we're trending a little bit lower, so we're going to lean more in that direction and be more willing to buy puts than calls at this point. If we do buy calls, they're probably going to be more scalps, if anything, and waiting until the daily trend gets turned back to the upside. So I hope you guys have enjoyed this video. Again, if you have any questions about the markers or indicators that we use or anything like that, let us know in the comment section. If you're seeing something out there in the charts that we're not seeing, let us know in the comment section. I'm always open to other people's opinions. If you disagree with my analysis, I'm open to that as well. And if you respectfully leave your comments, then I'm open to dialogue with you as well. So I hope that's not the case. I hope everybody enjoyed this video. If you did, make sure you hit the like button. It really helps us to expand our reach to possibly help other people generate a steady stream of income from SOXL, which, if you look at the delta to theta ratio and combine that with the low cost of the premium and compare that to the high beta that you get in the underlying ETF, it's a real recipe for a real cheap way to make a lot of money, or at the very least a steady stream of income for you. So again, I hope you liked the video. If you're not subscribed, go ahead and subscribe. Hit the notification bell. That way you know whenever we release a new video. The videos do get released. I try to release them as early as I can in the evening during the week, because I want to give people as much time to watch them, and not to have to stay up late to try and catch them. But Sometimes, life does get in the way, and they do get posted. Some get posted a little bit later than others. So you want to make sure you have that notification bell set up so you get the alert when they are released. Again, follow us on X at Bullish Chips. That way you can get our real-time entries and exits and just further commentary on the market during the day. But I hope everyone enjoys the rest of their weekend. Enjoy some time with some family or working on yourself, or just looking at the market further, and enjoy the rest of the day, the weekend. That way you're ready and prepared for Monday's trading. All right, have a good day.